Ladies and gentlemen of the crypto space, we're live on a Monday, October 6th at 11:41 a.m. As hypothesized, theorized, speculated on Friday, we'd have a decent close on a Sunday. And this could very well be a short stream because this is the start. And the start of what? The start of what we speculated on Friday, but the start of what we waited for how many years is the real statement to make. We are on the verge or in the process of the initial stages of breaking out. Breaking out of what? November 2021 highs. There has been no expansion in this market yet. There has been a return, only a return to the norm, return to the previous level. And this has been a process of what do they call it? They call it the distribution. People sell off from the top. All of it has been bought. Everything that has been sold from the top in 2021 has been bought. We retested that previous level back in December of 2024. Now, almost a year later, 10 months later, November of 2024, we're pushing through that previous resistance set back in November of 2021. Call this a cup and handle, whatever you want to call it. Looks like a bit of both. Maybe a double cup, maybe a double handle and a double cup, something like that. I drew it the other day. Fine. Maybe that's a cup and a handle, or maybe the whole damn thing is, I don't know, something like that. Or maybe it's this one. You would think that the handle goes a little bit lower, about 50%. But this looks lovely. And that's where we are. So the opposite of what everyone says we were about to top, on the contrary, we're literally about to just get started. So once you process that, you're like, okay, now it's game on. Now you get to sit back and relax and watch everything that you worked hard for over the last several years play out. Ladies and gentlemen, this is not a stream where we're talking about what to buy today, what's an opportunity today, what's a coin that can be purchased. No, we've been talking about that for years at this point. So this is a stream where we're rehashing what we did over the last years to get to where we are today that affords us the capacity to sit back and just relax and watch the market do what we're finally seeing it's going to do. Notice the confluence. We literally have a Bitcoin higher high, $125,000 on Bitcoin. This is just a disgusting chart in a good way. There's your 2025 level. So we had some nice resistance at 108. We tested that previous resistance of 4 times as support. We tested it twice, and now we just push for the higher high. So basically what this is, ladies and gentlemen, and I could draw it, is the breakout, the retest, and the higher high. And ladies and gentlemen, as many are aware, that is called the trifecta of bullish confluence. Breakout, retest, higher high. That's what I define as the trifecta of bullish confluence. Gold is providing confluence, further confluence. I mean, it's just straight up and to the right. Gold was an extraordinary investment about 50% ago. Um, dare I say, post like in 2002, that was generational buying opportunity. Would have been a lovely position to have back then. 100x on the money. Wild. Well, not 100, but if you got at $100, $150, and now you're at $4,000. Okay, 40x on the money if you got it 100. Wild. That's what gold has done. But that is your confluence that the structure of the global financial system is changing. Frankly, the structure of money is changing. And the most important thing that especially new folks listening to me need to start to understand is the difference between money and currency. Money is used to create currency. And understanding the mechanism of how currency is created from money is what affords us the capacity to identify business opportunities in these crypto markets. Because unlike in traditional finance, where companies and corporations obscure their business activity from stockholders, or basically take it away from stockholders. Stocks have literally nothing to do whatsoever with the business activity uh, of of these corporations in equity markets. Um, I've given that description, that explanation of how boards give a dividend just to shut up the shareholders. Here's your paltry pennies. Here's your sh- tiny portion of our revenue after we pay all our salaries and we pay all of our executive pay packages. Here's your dividend. So sit down and shut up. Whereas in crypto markets, that isn't the way it works. Everything is upfront, transparent, deterministic, decentralized to a degree, and immutable, hopefully, where you're going to get paid pro rata your proportional share of ownership of business revenue. That is a different equation, ladies and gentlemen. So that is why we've seen the best opportunities, best investment opportunities in these crypto markets, because the equation has changed with regard to actually owning a part of a business rather than owning a boomer meme coin on equity markets, stock markets. It's literally just a meme coin. There's nothing special about these stocks that people buy, especially when there's no dividend. It's literally a meme coin. Fine, you could have nuanced argument about REITs, got some cash flow, but often your percent rate of return is heavily diluted based on share issuance, capital raises, the selling of shares, so on and so forth. So you get shit, and that's unfortunate. But that's why we look here, and that's why the vast majority will miss this opportunity that has presented itself in these crypto markets, because it's not. That's the way opportunity works. You either see something that other people don't, or you do everything the same way that everyone else does it, and you're in stocks and you're going to get nowhere. Um, Whereas in these crypto markets, you will get somewhere. Ethereum outperforming Bitcoin on the day. We still haven't hit that higher high. So let's zoom out a little bit, get a little bit of perspective here. So you had your resistance level set back earlier than November of 2021, set back in May of 2021. So resistance, 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 breakout, retest, haven't hit the higher high yet on Ethereum. Breakout, retest, you want that higher high, and there's your trifecta of bullish confluence. That is clearly in the cards as a reasonable statement based on available confluence. Bitcoin being confluence, gold being confluence. Ethereum is going to push towards that higher high. The market's going to do what it's going to do, especially from a total three standpoint. This is just beginning. And this is basically the fintech part of crypto, the businesses, total three, not Bitcoin, not Ethereum. Technically, if you take out stablecoins from this as well, you get maybe a clearer picture, albeit stablecoins are a critical part of trying to understand how this economy of economies, this emerging market of emerging markets called this crypto space works. So I like total three, including stablecoins. Maybe, an additional inspection would be this chart without stablecoins, but uh, additional data. Additional data isn't always necessary. This data is sufficient unto itself to tell us where we are and where we're heading. The market's just starting to break out. Where we at with move 69? No movement today yet. Same close. What was it? Friday night, Saturday morning. We pumped down below 70. Off to the races, and let's see. I'm curious whether the next adjustment, next marginal move is back above 70, 71, 72, 73, or lower. You go lower and it's getting really interesting really quickly. Total three is going to start popping. Bitcoin, Ethereum, they all start popping. All crypto fintech businesses start popping. And that's just the way it works. That's just the way crypto works because this is the indicator, the forward looking indicator on conditions that um, favor currency supply expansion. That's the best way to put it. This goes down, global currency supply is going to expand in the future, short term future, 1 to 3 months, give or take, things start to get a little spicy. That's just the way it works. That's the way it works historically. And very likely the way it works now and going forward into the short term future because it makes sense. And it doesn't mean, considering the change of the global economic structure and flows, doesn't mean that sequence, that causality changes. Move comes down, global currency supply is going to go up, especially if you have confluence of decreasing long term treasury interest rates, which is increasing price, increasing value of global collateral, which is basically a leading indicator on dollar FX declines. Because if the world could borrow dollars, why the hell are they going to buy them? That's the equation. And that's why move down and 10 to 30-year yields down is a forward looking indicator on basically DXY down. Um, Nice numbers on the day. 4% apiece for the drones, zero with 3.5. Fell back to 4.5. Nice to see. I'd love to see that back above 5. Hiccup over the weekend doesn't seem to be anything significant with regards to their announcement. I don't even have to clarify that. If you know, you know. Curve at basically 80 cents, nicely looking like it put in that third higher low. So we have your lower highs and your higher lows. You get that push above 94 cents and things get interesting towards a buck 10. And then things get really spicy above a buck 60. Hope that helps. This is going to take some time to play out, or though maybe not. Sure as hell ripped off the bottom in November of 2024 in a matter of a couple of weeks. You can rip into the mid twos real quick. Look at that leg. That leg went from 22 cents to a buck 40. Why can't you rip from 70 cents to 250? Okay, so that's why this chart looks lovely. Now let's do some commentary and see if we could keep this to a modest length today. Mike, good morning. How are you? Much a pleasure, Senor Capitan. Uh, Zero, habla papo. Shout out from Caracas. Welcome. Enjoy. It's hopefully my content is useful, informative, and maybe even entertaining. Peter, good morning. Much a pleasure. Yes, is the moment we have waited for. All of the compounding will pay off soon. Fat claim season on the way. Yeah, and hopefully there's some liquid components of the portfolio. I consider a couple of things liquid at this point. Um, and you prepare as best possible, including unclaimed cash flow. That's relatively that's liquid, meaning you don't have to claim it into dollars now. And this is the start of an appreciating part of the market. This is the expansion phase of the crypto market. So you can delay claiming. By delaying claiming, you're basically accumulating stuff that you could claim later and convert to more dollars in the future, as long as you don't take possession, because possession is somewhat comparable, if not some synonymous to the word dominion, where you can exert control, um, make a decision, make a transfer. You can't make a transfer if something is yet to be claimed. You can't buy something if something is yet to be claimed. You can't sell something if something is yet to be claimed. You first must claim. Therefore, I would strongly argue that without claiming, there is no dominion. Therefore, you have not accepted income yet. If that helps someone understand what I think is a reasonable way to look at um, accounting, which is more important than ever, especially as this market starts to get a little bit frothy. Um, Cynthia Lummis, is looking to um, establish that that is the way forward with regard to accounting. That until you claim, and then until she actually takes it a step further, not only claim, but until you claim and then sell it, which is an interesting caveat, which is very consistent with the Jarrett 2.0 case, which we've discussed in brevity. But between those two, um, pretty interesting accounting realities come into the come into focus. Another story, we don't have to digress down that path unless anyone's interested about accounting and business structures and whatnot. Only a few people in here really give a shit about that, which is very unfortunate, by the way. Dean, good morning. Much a pleasure. Sir Joe, President, accounted for Arrow. Good morning. John Steps. Any insight on the Cipher airdrop? Yeah, that's cool. I gotta check that out. So I have my old routine, which is with Spritz Finance. Fine, Cipher's interesting. Whatever they're doing, I'm curious. I have yet to have something really convince me to change my routine because Spritz has just worked. And they all do basically the same thing. And Spritz has been working very well for some years at this point for me. And they were there before a lot of these um, competitors. I think the Cipher card, Argent, was it Pay? Pay? Is it Pay? Payy. Yeah, Pay is cool. There's a couple of really good um, products out there nowadays. I mean, the equation has really changed with regard to the capacity to directly finance um, daily transaction requirements uh, directly via uh, crypto capital management, basically bypassing traditional banks. I mean, you're still going through banks and some of their infrastructure with these types of products, but you've disintermediated having to actually make like an ACH or a wire transfer to a bank account, then to a credit card or a debit card. This is literally just to take stablecoins and deposit to the crypto debit card, and you're able to make a purchase right away. So at least it's disintermediating those steps in between, even if it's obfuscating them or just hiding them from you. They're still probably there. They're just making it simpler, all these products. This is a heck of a product. This works great. They all work great because nowadays the whole United States government is reoriented backing crypto. So the floodgates are unleashed. There's debit cards all over the place. You could live vis-a-vis capital managed uh, in crypto terms. You don't need a bank account for most things nowadays, which is really weird and interesting. Chicago, good morning. Much a pleasure. Eric, not to be a downer, and I know it's just the start, but what are indicators you'll be looking for? Tell you the top is near. I'd be looking for a spike in the move indicator down at the bottom. Um, you need capitulation to the downside, maybe a risk-off event in equity markets, and because that's literally what happened back in um, beginning of 2020. So it was risk-off from equity markets into duration, long-term U.S. government debt, and interest rates went down to zero point 0.3 whatever percent. Wild, and but look at that capitulation wick. You see some sort of explosive move, a top, a bottom, and you see that in the move indicator as well. These wicks to the top side were very capital destructive. So maybe we see this blow off move to the bottom, down to 37. God, the market. Can you imagine the market down to 37 on the move indicator? Absolutely is going to get frothy and disgusting and gross, and people are going to be selling NFTs for 200 grand a piece because that's literally what it was back in 2020 and 2021. But those times are coming again. Won't repeat exactly the way it did back then, but it's going to rhyme assuredly. Um, so a big spike, a reversal. What you want to see is a wick to the downside and then a big move to the upside. And that's literally what you see here. This is your top, October of 2020. Um, because Bitcoin double topped. Double top because this was your first top, and then a double top because you had a big move down on the move indicator here into summer. And you see that also in the DXY. So here's your double top. Your Bitcoin double top, boom, boom. See, down, up, smacked in. So obviously resistance from the downside on the 100 SMA on the weekly. That's pretty cool. And then double bottomed here. So this was your double top in Bitcoin, this formation here. But that's what I look for. You look for a capitulation and trend reversal, particularly in the move indicator back towards the upside, as well as on the DXY. Yeah, you see that, as well as, I mean, interest rates. You're not going to see necessarily a spike in interest rates unless this is follows more so geopolitical positioning, as well as the Fed. Less the Fed nowadays due to fiscal dominance, as Lynn Alden talks about. But you're going to look for that volatility spike, probably first and foremost in the move indicator. And then that's a forward looking indicator on probably where DXY is going to trend towards. And then yields versus the price point of global collateral, long duration US debt, that tells you the relative value of money. So as interest rates start to creep back up, whenever they bottom, um, that's depreciating the value of collateral, as that's decreasing the capacity of the system to print currency from money. Hope that helps. But that's what we're going to be looking at. That's what I look at. Yes, I agree. That's how my trust is set up. No claim, no possession, no dominion. Exactly. Glenn Shaw Glass, no dominion. Clear. Dominion is clearly realized and past tense. Realized. That's a heck of a word because it's not current nor future. It's past tense. So that these subtleties in semantics are quite meaningful, and I very much appreciate the rulings and um, the choices of words and tenses that judges have used over the years. The Glenshaw glass is pivotal with regard to the identification of income for tax purposes. Then you also have Eisner v. Macomber, and that is how you handle capital gains, IRC 1001, and gains basically, and realization, because you only have gains if you're realizing um, the delta between basis and current spot where a transaction's occurring. So Eisner v. Macomber and Glenshaw Glass versus Commissioner. And that's two pivotal cases to understand where gains and income recognition, or how to handle it from an accounting standpoint. So anyway, I'm digressing, but I always appreciate when you bring this stuff up, Peter. That's exactly the case, in my opinion. That's what Jarrett 2.0, the 1.0 case that was dismissed by the IRS, and they gave him his money back because he was staking Tezos, and Jared wanted their money back, and the IRS said, "Here, take your money back." They didn't even fight him. He'd paid no tax. The IRS gave it back because he didn't have dominion. Or maybe it's more so you're speculating on why they withdrew the case, but it certainly aligns with Cynthia Loomis and how she wants staking, and you receive your property from staking claim. You don't have a tax liability until you liquidate what you claim. So that plays into basis. So basis is basically what you claimed that. So this doesn't that produce something interesting? If basis is what you claim that, and you immediately convert to stable coins. So the basis of $100 Bitcoin claim is $100, no liability. And then you immediately convert to stable coins. So $100 convert to $100. There's no gains, Eisner v. Macomber. So depending on how the tax rules come out, and it could be very interesting. Because if your basis is 100 and you convert the stable coins and your basis is 100, and then your stable coins in the future get converted to dollars on a debit card and your basis is still 100, there's no gains, and they they corrected the income component because I don't know. We'll have to see how they define the basis. But I would argue in any case, especially in a trust setting, that there, It's not, you're not dealing with money. That's probably the most important thing. That's what most people miss. None of this is money. Oh shit. It's not even like the conceptual type of money when we talk about US government debt versus currency. Um, money money has a very unique definition. Um, and the distinction is crypto is property. It's not money. It's not currency. Property. Like it's literally explicitly declared to be property over and over and over again in memo and whatever notice and FAQs from the administration and regulatory authorities. It's literally property. So that brings up some very interesting considerations, especially from a state law perspective. Now, the real art of a business entity is the intersection of federal law and state law and how the two of them, oof, commingle together. Because that's the 10th Amendment of the Constitution. And that means you're on a very strong footing with regard to argument if that's what you're talking about. I have identified state law that says I need to do this. I am treating this accounting like this. And unless, according to the 10th Amendment, there's overriding federal law, explicitly overriding federal law, state law holds. That's the 10th Amendment. And that's like the supremacy clause, which is a very popular topic nowadays. If the federal government says something, it is the case. If they don't, it's state law. That's like Gregory Helvering, and there's a bunch of other cases that deal with um, substantiation of basically the 10th Amendment in a legal setting with regard to this certain business types of structures. Hope that helps. Interesting topic. It's a good topic. I mean, literally, that's some shit folks really needed to do like the last 2 years and preparing for Bitcoin at $125,000 to really optimize accounting. And what's just to be very clear, semantically, that's called tax avoidance, which is completely legal. Tax evasion is where you have a tax liability. The IRS knows you have a tax liability. You had filed 1099s and W-2s, and you have a tax liability, and you're evading the paying of it. Avoidance is where you craft a business with documentation and you're citing court cases and you're citing IRC rules and you're citing the Code of Federal Regulations from the Treasury, and you are declaring literally what you're doing on a Form 8275, which is a declaration form for you to tell them why you're doing what you're doing, how you're doing it. That, my friends, is called evasion, which is completely legal according to the IRS Handbook for Special Agents. Just very important for these little subtleties to be understood. You could use law, you could read law. And nowadays with AI, I'm pretty sure, hopefully, a lot more people are doing greater than nothing because the AI is pretty crazy. No Ether5 for the cap. No, no interest in that stuff. I not no, not interested in. It's on the what? Are we talking about their? Don't they have a debit product? I don't know. The two that caught my fancy. Um, I have Spritz from back in the day, and I miss Juno. Juno was there for a while, but they're gone now. But I like the Argent product, and I like the Pay product, which is this thing. This Pay product. This is nice. But there's a lot. I have on our Discord. I have a list of credit product, debit product, one after another. There's all this stuff we've accumulated over the years. And I appreciate all you guys, 244 people on the stream. I mean, there's got to be like 30 people on Discord where there's a list of 50 different credit and debit products. There's literally a channel called Trust that has years of conversation, years of research, analysis, a link to all my documentation. You know, I always thought that that kind of content will be more popular and people will be able to use it to do a little bit better. But all right, it is what it is. Who am I to judge and what people want to consume? Anyhow, Iden, how about Cash by EtherFi? Not on my radar, as I mentioned. Have you heard about Cast? Cast is on the list. It's on my Discord list. Pay interesting due to ZK. Looking forward to more development in this space, such as using ZK for KYC, which is still a point of vulnerability. Yes, all this stuff is very interesting. I like Pay. I like the ZK. I like Polygon use. It's not very popular nowadays. Polygon is kind of taking the back burner. Um, Cast is interesting. I, for one, enjoy the accounting and trust talk. Very few people do because, listen, if you if you got like 100 grand worth of claim button clicks, wouldn't it be better to have like zero tax liability as compared to 100 grand worth of tax liability? I don't. But this comes down to like the foundation of forward thinking. Like we go to you want to make money. So how do you make money? You go to school to get some education so you can make more money. But why do folks not finish high school and they go get a job at Starbucks and they're like, I want more money. All right, you should have gotten an education. It's that forward thinking. It's the same thing with regard to business entities and accounting, so on and so forth. It's hard for people to do something before prepare for the future. That's why not everyone goes to college. That's why not everyone has a business structure. That's why most people, when they pass and they're older, you're going to probate court, and that shit takes forever. And you realize that takes years instead of preparing something that bypasses probate, or it doesn't. Because if you go into probate and you inherit a fair amount of money, uh, which is a lot, because inheritance tax is applicable post the threshold, past the threshold. But if you bypass probate, there's no inheritance tax. So I don't know. I like to prepare. That's all I think about is preparing how I could take care of myself, my family, and especially my kids. Good morning, Killis. Much a pleasure. Much a pleasure. Peter, the smart contract is proof I don't have possession. Oh, isn't that an interesting one? The smart contract is also proof that it's not possession. It's partially the case. A claim you can prove you don't have possession, but the smart contract is proof you don't have discretion. Discretion is even more important. Glenshaw Glass, complete dominion. So discretion and dominion is an entire memorandum I wrote. If you don't have discretion, a capacity to make a choice about what to do with capital, do you have unfettered dominion? Are you dominating the capital? You have dominion of the capital if you can't, if you, by binding rules of your business structure, if you can't make a choice, it is not up to you. You don't have that discretionary authority to do anything other than follow explicit rules and regulations. So dominion gets very interesting when you really break down potential ways to prevent dominion, forcibly prevent dominion. Smart contracts could really take things to a wild level. Because if you could programmatically prevent dominion, then you could also programmatically prove that dominion was prevented. And if there's no dominion, there's no income. So that's a very interesting thing with regard to discrete entities, corporations, or like a trust structure. Rockefeller always said, control everything, own nothing. Don't own anything. You control the corporation, you control the trust. And with smart contracts, you can control it by not without having dominion because you can control it that you could execute the smart contract based on its rules. It has dominion. It's making the choices of what to do, when to do it. All you can do is say execute. Execute your rules, execute your dominions. Anyway, that's an interesting entire memorandum I wrote. But I find that those semantics fascinating, discretion and dominion in particular. Dean, I think nuance across different jurisdictions makes it complex. I'm researching from a UK perspective. Yeah, UK is much more complicated. UK is really the history of where United States formed its common law. All this dates back to the UK, obviously. Interestingly enough, in the United States, all 50 states have very similar state law. So it's just an interesting reality how that worked out. I wouldn't be surprised that that is not coordinated in some way. But yeah, uh, I'm sure there's ways to avoid taxation everywhere around the world. Um, Whatever you do, ladies and gentlemen, the most important thing is to just say everything, report everything. But your job is to understand the rules and the regulations and the laws and report everything according to the rules, the regulations, and the laws. And declare it. Say exactly what you're doing and why you're doing it. And you were transparent, which is good faith. And that's all that matters. That's the most important thing that matters. Good faith. Back over 125. Yay. Peter, yes, I can get a higher basis by delaying claim and then selling a basis stables, not going fees. There's some slight loss. Now, for me, claims are property, not money or income. Claims are property. If claims are property, it gets really interesting because if you're claiming property and it's unrealized property, that's what that means. If Cynthia Loomis's tax plan goes into effect and you're able to claim from staking and there's no income due, it's basically claiming unrealized property, and that property has a fair market value, which means what's the fair market value on receipt? And the fair market value on receipt is the basis. So it gets pretty interesting because you're dealing with property. It gets pretty interesting because of how the IRS historically talked about crypto in terms of property, not currency, not money. Period. Blanket. Full stop. Mic drop. And now coming out of Congress and the Jarrett 2.0 case is probably on hold until like Loomis is whatever she's thinking of goes through. Now you're talking about fair market value of property on receipt. That's fascinating because that changes the equation, changes the whole thing. I have my long-term Bitcoin in a different trust. It's more of a classic dynasty trust tailored to BTC. The beauty of it is of these entities is you're able to encapsulate them and define the rules for them discreetly and um, holistically. Like it has its rules and it's like a black box, input, output. How do you engage with it? Who can engage with it? Who has access? Who doesn't? And you could it doesn't technically it doesn't cost any money to do the corporation actually costs more money. The trust you could build by yourself. Literally a trust is just if you write on documents, pieces of paper, you could create anything you want. Called a private fiduciary. Hale versus Hankel, 1906. Basically, the individual has the right to contract to an unlimited extent. We in the United States have a complete capacity to contract with almost no restriction. That's what Hale versus Hankel talked about. It's a hell of a landmark case. And that means you could build whatever you want, just writing on paper. And then top it all off, IRS EIN. You go like this, you go to the IRS EIN, you go here, you go press the button called apply for an EIN, and you go begin application. There's no money, it doesn't cost any money. Ladies and gentlemen, it doesn't cost any money to do any of this. And isn't that a fascinating thing? Everyone's like, "Ooh, how do I open a company? How do I open a corporation? Oh, I need to spend the shitload of money for a lawyer to make a trust." No, it costs no money at all. It's $0. It's press button. It's crazy. Now your job is to go over to ChatGPT and get the big one, get the $300 a month package, or get Grok and get the $300 a month package and start learning and start building. Maybe stop by Discord and take a peek at some of the stuff that I've written, then maybe that'll help you. Because the whole point is, what I built for myself isn't necessarily applicable for what you want to do. You have to understand what you want to do. So you have to learn what do you want to do, why you want to do it, and then you can figure out how you could do what you want to do. It's not one size fits all. You got to build something. So anyway, that just starts whenever anyone wants to start it. It's the same way with any project. Look, there's 281 people listening. That means everyone started talking about and thinking about capital management at some point. It's the same thing with regard to entity structures and accounting methodology. It's one day you wake up and you got a fire lit under your ass, and I'm like, I'm going to actually do something about it. Anywho, Spritz is still good for me. Looking at adding Pay or EtherFi to the stack, exactly. Spritz has been great. By the way, I think Spritz uses the same card provider as Avalanche's card. Meanwhile, that's a very interesting one also. Literally, Avalanche Foundation has their debit product, which is tightly integrated into Avalanche's L1 network. It's Avalanche. That's a heck of a network. So that's a very interesting product in that regard. All this shit, we could only have dreamt of this stuff back in 2021. Seriously. Sports Canada, yield basis looks like the real deal could drive more flows than Curve itself. Well, it drives more flows, but it will directly affect Curve. Yield basis is the real deal. It has had massive capital raise, massive valuations. Its initial LPs are just on fire, in my opinion. And if they get to the target and the target's $1 billion by the end of the year, oh my God, that means, frankly, if the target is $1 billion on yield basis by the end of the year, and they get there, that's $1 billion worth of CRVUSD. That means CRVUSD is the third largest stablecoin in existence behind USDC and USDT. So to me, that's called it won. My 2 cents. Article 1, Section 10, Constitution Contract Clause. What is that? Article 1, Section. Oh, the right to contract. Uh, Several limitations of the power of state government for preventing acting like independent. Oh, that's interesting. Well, the contract clause. Well, here, Hale versus Henkel. Uh, yeah. Okay. No. The individual may stand upon his constitutional right as a citizen. He is entitled to carry on private business in his own way. His power to contract is unlimited. He owes no duty to the state or his neighbors to divulge his business or to open his doors to investigation, so far as it may tend to criminate him. He owes no such duty to the state, since he receives nothing from them beyond protection of his life and property. His rights, as such, are existed by the law of the land, long and antecedent to the organization of the state, and can only be taken from him by due process of law, in accordance with the Constitution. I love that. His power to contract is unlimited. Anyway, that's why I go back to Hale versus Henkel, 1906. That's a big one. And obviously, that'll fall back on some sort of constitutional amendment at some point. Yeah, trust is literally free to set up. So wild to think about. The super detailed structure is free to set up, no cost involved. Yeah, you get on ChatGPT and start building, ladies and gentlemen. God, I don't know. I don't even know what to ask at this point. It's like, I don't know. That's why my documentation on Discord may help folks. Like, what do you want to do? Why do you want to do it? There's no such thing as not paying taxes. That's a silly notion. So, what can you build? You could look. There's IRAs, Roth IRAs. These are tax deferred entities. So clearly, there's a capacity within financial norms to create tax deference. So that's basically um, a core of what I find interesting is deferring taxation until when. So that's very consistent with an IRA and a Roth IRA. So there's also Uh, Things like deductibility. So clearly that's scattered throughout the IRC, what is and what is not deductible. So what is and what is not taxable. So what is income? It's a heck of a, yeah. I'll give one glimpse and then I'm going to end the stream. If I could find my document. Yeah, check this one out. Income definitions. That's a good one. So you realize there's multiple definitions to what income is. There's gross income, income with no modifier. Ooh, that's the spooky one. Distributable net income, which is very trust centric terminology, and then there's taxable income. These are all different definitions, but by breaking them down the way I did, um, this turned out very interesting. These definitions. What is income? Go figure. It's not so simple. But guess what? It is simple because you run it through AI and then you could do things you never thought you can do. Have you been keeping up with the development of RenV2 led by David Perkins? Long story short, the goal is to allow self-custodial BTC to be used across DeFi. Dark nodes as a pizza shop. Well, I still retain my original V1 dark node. So the second I hear Ren spinning up new infrastructure, I'm going to be like, okay, claim, lock, dark node V2, happy captain. That's my 2 cents. Holding BTC to Ren node earn yield on liquidity through on yield basis too. Yeah, I'm with you, dude. I like Ren V1. I miss it. I wish it did not get all messed up by Alameda and FTX, but I just retained it. I let it sit, marinate. It's going to be what it's going to be. If it comes back to life, I am not going to be complaining. You know what I mean at this point. I think a lot of people are in a similar position. Monday, October 6th, 12:28 p.m. Thank you all for joining me today. 290 people made it to the end of the stream and are all now that much more rational because of it. Stay calm, cool, and collected throughout the week. We are skirting with 125,000 on the day for Bitcoin. Total 3 is in position to potentially break out. These are very early signs of getting above previous resistance set back in 2021. So these are this is a very constructive time period where we get to see where things are likely heading. So enjoy the work you've put in over the last years and know that things are heading in the right direction. See you guys and gals later this week. Until then,